All right, good afternoon and welcome to Seattle's Eastside Real Estate Podcast. It is Wednesday, December 9th, 2020. We're really glad you joined us today. If you're looking to listen to any of our past episodes, you can find them anywhere podcasts are casted. So Google Podcasts, Apple Podcasts, and much more. Additionally, we do have additional videos of each broadcast on our website at the eastsiderealestateteam.com or on our YouTube channel. You can just go to YouTube and search for the Eastside Real Estate Team. If you like what you hear, please subscribe. We appreciate that. Today, we'll be welcoming Michael Burdick from Loan Depot and Anny from the Eastside Academy. First, let me start by discussing some real talk. Today, we're going to be talking about, is it a good financial move right now to buy a home? So there's no doubt 2020 has been a challenging year. Many Americans can say the least of their concerns probably would be housing. But the truth of it is we've seen a really aggressive monetary policy that has been keeping our mortgage rates at record lows. And what that has then done is created a more level playing field for affordability. It's interesting to see home prices increase, but to see affordability actually go up because the cost of money is cheaper. The interesting part about that is we've seen almost a whole percentage point, and I was just looking at mortgage rates, and we'll talk a little bit more about what impacts mortgage rates and what causes them to go up or to go down. But in addition to those going down, mortgage rates, we're seeing appreciation. Now, on a nationwide level, we're seeing an appreciation of 6.7%. That is a huge number for a nationwide, right? Because you're going across markets, whether it be Idaho, Washington, Florida, Alabama, New York, 6.7% appreciation. I would say probably if you were to look at a real nationwide number average, you're looking at like 2 to 4% at the most to see that kind of a level. So let's take a look at some of the calculations. All right. So let's just say if you were thinking about buying a home around $300,000. Now we know in this area, it's the median home price is well above that. So we're going to use an example of $300,000, and then we can multiply by 2. Okay. So a $300,000 home that's appreciated at about 6.7% appreciation is about $320,000. So take 600 and go to 640, right? 320. So compared to this time last year, if you were buying this time last year, you would have actually saved $87 in that scenario by purchasing a home today. So that equates to about $1,000 a year. So double that if you were to buy a 600. So if you're to buy a $600,000 home that appreciated, it would be worth 640, and you would be saving about $160 a month. But what about the economy? Is it still in a recession? Well, the truth is it is, but we don't know when that will change. There's a lot of things putting pressure on the market. One truth of the matter that we've talked about on this show before is that there is a lot of desire for folks to have a home. And, I used the term nesting the other day when meeting with a client. To those folks that have had children, the last few months of pregnancy, there's that whole nesting phase where you're kind of trying to set up a comfort level at home. I think that's what a large majority of people experience this year is spending so much time in our homes made it much more important than it normally was. So here's the bottom line. Home prices are going to always appreciate. Mortgage rates may not always decline, right? We're going to see something change as banks are looking to recoup some money, and the economy starts to maybe falter a little bit. Buying your first home or moving up into a bigger home, it really makes a lot of sense. Now, the challenge that we're running is finding homes. So as you watch this, and maybe your experiences, you've been in a home for 20 or 30 years, and it's something that you can no longer care for. We want to, look into possibly this being one of the best times to get an absolute top dollar on a property without having to fix it up and do a whole lot to it. Obviously, some basics need to be done, and we did a tremendous job on a house that we listed about a couple of weeks ago. It needed some things to be done, but we ended up selling that home in 3 days. So I say, hey, it's a great time to buy. It's a great time to sell. But, you know, right now, yeah, I have people say I want to get as much as I can out of the home. And if I were to think of a marketplace where you had the ability to get the most out of the home, it's a marketplace that has a tremendous low inventory. And we are actually probably about 2 weeks worth of inventory. In some neighborhoods, there's nothing. There's no choice of homes at all. So reach out to the Eastside Real Estate team if you have any questions on that. Now, before we get to our next guest, I would like to share my screen and talk about our first sponsor. So our first sponsor, this is really timely for the guys out there watching, or girls. I guess it really doesn't matter at this point, because it's Christmas and everybody likes a little bling, right? I mean, what's not to love? So here we go. I'm going to share my screen, and here we go. So my good friend, Jeanette Baton, she owns a jewelry company and she custom makes jewelry. So the whole experience of going out to shop for a ring, wouldn't it be easier if you just went to the place that actually makes the ring? So she actually designs custom jewelry, and she can do anything. Typically how I operate is I have my daughter or my wife send me some examples of things they like, and I send it to Jeanette. Jeanette can get a much higher quality product, and she can customize it. So if we want to do something specific like a monogram name, if we want to do something like a totally unique design, she actually draws and then creates the design. So if you're looking to get something special for that someone special, I want to encourage you to go to dynamicdesignsjewelry.com. You can reach her at 425-827-7722, 425-827-7722. All right, so that's our first commercial. Now back to the show. So on the phone here, we have Michael Burdick, good friend from Loan Depot. Michael has been doing mortgages for about 14 years. Is that right, Michael?
Not quite that much.
Oh, okay. Sorry. How long?
About 11 years.
11. Okay. So just a few years short of 14. So awesome. Michael is with Loan Depot. He's a senior loan officer there. And in full disclosure, refied my house just a month ago. It was an easy, seamless process. But before we made that decision, we kind of mulled over a couple of things. So Michael, welcome to the show, and tell us what is something that we don't know about you.
Wow, put me on the spot. Well, I guess if you look at my Zillow profile, you know that I'm a pretty passionate skier. I've lived in the Northwest my whole life, and I actually volunteer ski patrol at Crystal Mountain. But this year I'm not, because I had twins 3 months ago. So I've been clocking lots of hours in this bonus room here between feedings and doing mortgages.
You got your hands full, you and your wife. Absolutely. Well, congratulations on that. All right, so let's jump into the questions that we have today. First off, what reasons do people kind of mull over the reason to refinance?
Well, there's lots of reasons to do it, and then maybe not do it. And I mean, the biggest thing is, you hear in the news that it's record low mortgage rates. So that inclines you to start researching online and talking to people about getting referrals on who you can speak to. And when I have a client, we don't just dig right into the application. Usually we have a consultation and we review, okay, what are your goals? What are your long-term plans with this property? And then other things in your life. Are you planning to move or start a business? Or, there's lots of things that will help us determine if refinancing for you is going to be a good idea. And then the most popular reasons are to save money per month. Cash flow is huge. And that's across the board, across the country. That's most people's main goal, is when they can lower their interest rate, they're lowering their cost to borrow, they're going to lower that mortgage payment. Other reasons would be, I'll talk to some people and maybe they've lived in their house 2 years and they know their rate is higher than market, and they say, I'm comfortable with the payment, I don't want to go through that process. So then I'll tell them, well, maybe we can lower your term. What if we kept your payment the same, but we can knock off, maybe you started at a 30-year, now you're 2 years into it, maybe I can get you a 25-year or a 20-year for relatively the same payment. And then they're like, yeah, that makes sense. And maybe they still want to sell their home in 5 years, but then when they go to sell, they're going to have more equity for proceeds for their next move. So a mortgage is a really strategic way to have like a forced savings account. We all have savings accounts, but you can throw it into your checking whenever you want. A mortgage is an asset that you're going to have that is appreciating over time, and you're going to have those proceeds when you ultimately sell or retire or whatever it is. Other reasons would be to consolidate high interest credit card debt. So sometimes we'll do cash out refis where we're including other payments to maybe raise your mortgage payment, but overall, borrowing at rates at 3% or sometimes even lower into the twos is amazing compared to if you have high credit card debt at 18%.
Mm-hmm. So why would somebody, I mean, those are all really great reasons to do it. Why would somebody hold off?
Yeah, I mean, I can go on and on about reasons to do it, but there are also reasons to hold off. And I mentioned some earlier, like, are you going to be moving soon? I mean, we can structure refis that don't cost really anything out of pocket. That just means you're not going to get the lowest payment. If you lower the rate to current market, or sometimes you can buy down further, that's going to have cost to it. You're going to recoup that over time. But if you're only looking to live in your home maybe 2 years, or it might not pencil out. So that's part of the cost benefit analysis that we'll do together when we review on that initial consultation and see if it's going to make sense. Other reasons, I mean, COVID is a kind of a crazy time. I mean, are you a business owner? Has that changed your income? Are you furloughed? Are you in a forbearance program that has been offered you by the CARES Act, which is through COVID relief? What else?
I mean, those are disqualifiers, right? I mean, it being in forbearance would disqualify somebody from being able to refinance, right?
It does in the short term, usually. I mean, I feel like guidelines are changing constantly on it just because it's all fluid, and
yeah.
the CARES Act was basically put out there by Congress and mandatory to be offered to every person that has a mortgage in the country. So a lot of people just opted in before the investors of Fannie Freddie could even write their guidelines yet. So it depends on the program that you get enrolled in, whether you're deferring it and have to pay it at the end, or if you're paying it on the end of your term. Like, there's different rules on that. So.
Okay. So interest rates, roughly, I mean, obviously there's a lot of factors, but if I heard that the conforming loan limits increased. Is that right?
Correct. So everything after January 1st, right now we're max at 741, 750, and then they're going up to, I'm not even going to say it because I didn't write it down, but I think it's 765 or 775.
And that's like, conforming loans are the sweetest possible at 20% down or 20% equity, right? So from a refinance, conforming loans would have the best baseline rate, not factoring into anybody's credit or anything like that, but conforming loans. Am I right on that?
Right now, yeah. And it's not always like that. Like, over the years I've been doing this, sometimes jumbo rates have been better than conforming. But right now, jumbo, especially during COVID and initially in COVID, got shut down, and they've gotten more strict as far as guidelines for reserves required and looking at income more closely and things like that. So those rates are a little bit higher just because the investors pool has gotten smaller on the backside. But yeah, I mean, conventional rates right now are really good.
If you had just like the sweetest, easiest A+ credit, a conforming loan limit, 20% down, what rates are we at?
Purchase, you'd be looking probably at the mid twos. Refi, you'd be probably mid to higher twos. And that's today, so don't quote me.
Yep. Yeah, no, of course. And that's today. And just so you know, we're recording this ahead of Wednesday. So I just want to be clear. And it's an important thing to say because, I can't tell you how many people, when they're refinancing or purchasing, it's like, well, I called this lender and I got this rate, and I called this lender and I got that rate, and I called this lender and I got. Where lenders vary is on fees and costs and service. Rates are all bought at the same place, almost at the same time. So if in a day time, all the information's there. So So I don't want to spend time on rates, but I would, we've got a few minutes left here. And I would like to know that if you are in the process of refi, when is the lock? I mean, what's the idea of locking in the rate? When does that happen? And when should somebody lock?
Yeah, so that's a good question, whether it's a purchase or a refi. I mean, on a purchase, we need to be under contract. So a lot of times people will do their application with me and say they're looking at homes and think that they're locked, but no, because we need the exact terms of what we're going to be locking and a close date, et cetera.
Mm-hmm.
On a refinance, where a year ago I could close a refi in 3 weeks, no problem, but right now they're just taking longer because this is the biggest refinance boom that's ever happened for a lot of reasons. Excellent rates, great equity, so people are getting the best terms that they've ever had, and that's why it's so popular right now. But when you should lock is really a conversation you need to have with your lender. I look at the market closer than most people because I subscribe to servicers that are experts on that I get notifications daily. I get a morning video sent to me. I know what's going on every day. And, whether it's the jobs report coming out, whether it's the stimulus that Congress is passing and Fed updates, and there's just more that you even want to look into. So it's really a conversation of talking to your lender, seeing what lock options they have. Like, can you lock for 30 days? Can you lock for longer? Can you stay floated?
How long can you lock for, just on average?
Purchase, I mean, standard is 30, but we can do longer. And then, like, I have a pre-sale under contract right now. We're going to do a 6-month lock.
Oh, wow.
They're saying, well, I don't know what rates are going to do. So there's a slight cost to that gets built in, but they're wanting to do that to protect themselves, which is really smart because they're so good now and we don't know what they're going to be in 6 months.
So let me just put a hold on there. This is actually some good information. Is if you're out there shopping for a house, new construction is one of the best ways to go right now because, it's still competitive. But if you have a home that you have to sell and you need to buy a home, you can buy it, and then you're going to have several months of runway before that you need to get ready to sell your house. So it's kind of cool because you don't have to be contingent. But what you're saying is you have a program that I can lock today at 2.5%. Let's just say hypothetically that home is below the $900,000 range. Put 20% down, and I can lock it until it's completed, right?
Correct. So there's we lock it slightly higher than current market, and that's the cap. And then if rates skyrocket on you, you're protected. But then if rates get better before closing, we get a float down option.
That's cool.
So it's a really cool program, and it's for somebody that wants to play it safe. It's kind of like an insurance policy on your rate and protecting yourself, and your budget up front, and that I don't want it to go higher than this. It's a great way to protect yourself. So.
Okay. All right. Well, we're about to finish up here. And I just, in conclusion, when you're thinking about interest rates and where they're headed, just give me a quick couple of seconds on where you think interest rates are headed in the next 3 to 6 months.
Again, anything can happen. I mean, I think the recovery that we're having in this country is not a quick recovery, but the vaccines are definitely going to help and hopefully get us out there. And that could, as the economy opens up, and we're all going to go crazy traveling and going to every restaurant and movie theater we can once we're able to. I mean, mortgage rates will eventually go up. I mean, they're being held down by the federal government, basically, and the Fed. And so I think we don't know that answer. And the safest thing to do is, if you can, look into your options now. So give me a call.
Awesome. Michael, thank you so much for coming on the show today. We appreciate it. All right. So next up after the break, we have Anny from Eastside Academy. Right after this short break, let me do the share screen thing here. Hold on 1 second. We'll see you later, Michael.
Thanks,
I know
guys.
you're super busy.
Awesome. Thank you.
Thanks, Michael.
Yep.
All right. The next portion of this show is brought to you by Lotus Media. They are home photo and digitization experts. Let me tell you, I have also used Lotus Media. I basically took all of my wedding videos, all my stuff from, remember when we actually had to develop film and all that stuff? We had this security vault, like fireproof safe thing. Took it to them, digitized everything, put it in the cloud. It's, basically archived forever. And it was cool because these were videos that, I had to pull out the videotape and put in, and connect it to the TV. Now I can, anytime I want to look at the video or edit something together, I can put that together. So Lotus Media is a local company here in Bellevue. You can, they've got a couple of drop-off stations, one of our other sponsors, but you can just basically get started, click on their link there, set up stuff, and their pricing, I have to tell you, is far better than Costco, far better than any other online service, and they're local, so you can kind of know that you're not shipping something off to a warehouse somewhere that might get lost. So Lotus Media's website is lotusmedia.us, lotusmedia.us. You can call them at 855-587-6334. Lotus Media. Let's get back to our show and our next guest. Anny, welcome to the show.
Thank you so much for having me. I really appreciate it.
So Eastside Academy, right? Now I'm pulling up
Yes.
my notes. Let's see, here we go. And I'm just putting them over here. Oh, I got to stop sharing is what I got to do. There we go. Boom, there we go. All right. So Eastside Academy, we're talking about fundraising and community engagement during COVID. Annie's, am I saying Anny, right? And why? I'm just like, I've never seen it spelled that way. For the past 3.5 years and been in her current role for over just about a year. Grew up in Oregon and moved to Washington to attend Northwest University. That's in Kirkland, right?
Yes, it is.
All right, awesome. Graduated with a business degree, and upon graduating, knew that you wanted to make an impact, and that's what led you to Eastside Academy. All right, so tell us a little bit about the work that you do for Eastside Academy.
Yeah, for sure. So I guess I should explain kind of what Eastside Academy is.
Yeah, that'd be good.
First, just for those of you guys that do not know. So Eastside Academy, the short end of it is we are a alternative high school, and we serve students that are struggling with traditional high school. And I'll go into more of the details later on, but they are students that potentially are struggling with mental health issues or drug or alcohol related issues. Obviously those overlap here and there, but what I do for Eastside Academy, and I'll be calling it EA just to shorten it up.
Okay.
But what I do is I am the Community Partnerships Officer, which is essentially fundraising, development, anything where somebody's like, hey, I want to be involved in this way, like, or can you use this skill set? And I'll kind of try to match them up. So the other day I was actually talking to a financial advisor, and she was just like, oh, I would love to be involved with your organization. How can I get involved? And we're thinking about potentially having her talk to the students, because we do have people come in and chat with them about financial literacy, things like that. So just trying to connect people from the community to Eastside Academy in whatever way they can, and then fundraise as well.
So does Eastside Academy have a traditional location?
It does.
Okay.
So we actually are located in Bellevue.
Okay.
And we are housed in a church, the Bellevue Presbyterian Church. When they added on to that church, they actually did 2 kind of floors. That is where we are currently.
Oh, that's awesome.
Yeah.
And so how many students, and currently I'm guessing it maybe it looks a little different than it did before, but how many students are typically a part of the Eastside Academy?
Yeah, so we intentionally we try to keep it small. That's kind of the whole point. We don't want people to fall through the cracks. So we max, it's 50 students.
50.
And currently we're not quite there. I'm not sure the exact number. I think we're in like the 30s or 40s currently.
And so how have things changed since COVID?
Yeah, that's a great question. A lot. We actually are one of the few schools that are doing like a hybrid model. So we are in class in person 3 days out of the week because we can social distance. We have the space for it. We don't have that many students, so we have that ability, and we think it's important to be in person. But then also Thursday, Friday, we have online classes, and that's kind of due to in case things go back to just being online fully, like we don't want them to get out of the rhythm, because a lot of students have seen like significantly decreasing attendance and different things like that, just because that's just so different. So we want them to continue to remember how to do that online.
How to do schooling.
Yeah.
So since these are kids that have been, struggling in general, I'm guessing the level of consistency has probably been really good for them.
Yeah, for sure.
Considering the current environment in public schools, because right now they're still trying to figure out how to get those started.
Mhm.
So Eastside Academy it's privately funded, but you also raise funds. Kind of tell me how that works. I mean, if somebody wants to send their child there, they're going to have to pay tuition, right?
Yeah, so tuition is on a sliding scale.
Mhm.
So we never turn away anybody because they can't pay for tuition. So I would say probably 99% of our students have some sort of scholarship. Basically, it just depends on the need. So it literally is just a formula. You put in how much your family can contribute, and then we scholarship the rest of it. And that's kind of where I come in with fundraising. So to make that possible. So that is never a deterrent. We don't ever want it to be a deterrent for people. But yeah, that's kind of what we do.
Okay, so now that we have kind of a crazy environment, and your role is community engagement and fundraising. How has the fundraising aspect of it changed?
Yeah. Oh man, it's changed so much. So, for example, we had our annual auction just this past October, and that's normally in person. That's normally a big event where 300 plus people come together
Oh,
in
yeah.
person.
Yeah.
This time it was online and it was virtual, and it's different.
How were the results?
The results were, we actually did better in certain segments of our auction than we would have done, or we have done in person. So for example, we have a fund a need section, and we did better this year than last year. However, things like the dessert dash, we didn't bring in nearly as much money as we did last year. And that's kind of makes sense because there weren't as many like cakes, and it was just done differently, and you don't have the kind of environment of, oh, I want to beat the next table and
Yeah,
get a better cake.
it's not as competitive when you're kind of
Yeah,
sitting back. Yeah, that's true.
yeah.
Well, I guess some ideas would probably have to do a little bit more often and get more creative. I know as a real estate agent, we're getting creative. We're doing virtual open houses. It's not the same as walking through a house, but it certainly is.
Sure.
So, and as far as community engagement, give me an idea of what that looked like before the pandemic.
Yeah, so before the pandemic, we would have so we had these things called luncheons, where anybody who was remotely interested in Eastside Academy, there was just once a month, there was a specific day, they would come in, they could talk to, we usually had a student kind of share a little bit about their experience. We had the executive director talk to them, and then they could ask any questions that they would want. And that was like a huge part of just getting people involved. And then it was also just so personal. We have volunteers that come in and they would bring donuts for the students, and then they would help in a math class. And now it's just obviously way different. We've been helping a lot with providing food for some families. And so we do have volunteers now that come in, and they will actually like pick up food, drop food off, like that type of thing. So it's just more removed, I guess, just due to COVID. So things like that have had to change. And
I feel like you could do some Zoom calls and have some professionals come in and do Q&A and stuff like that. That would be really cool.
Yeah, so actually, I think it's this next week, we are having some finance people come in and talk to the students just about the finance, and then I think we typically have like a career day type thing during the year, and I think we're going to have that sometime this year and have, it's going to be Zoom.
Yeah.
And it's kind of just be like a different profession, different people talking about their profession. Yeah.
Okay. So how have your volunteers, mentors, and donors been able to stay connected to Eastside Academy?
Yeah, so our mentors, typically a mentor would come in once a week and eat lunch with their student in person. Now that's
Do they
over
have
Zoom.
one-to-one mentors? Is that how that
They
works?
do. They
Okay.
have one-to-one mentors. We match them up with, there's like a whole application process.
That's awesome.
Yeah, we match them up, and typically they stay in that mentorship relationship after they graduate. And now it's over Zoom. So they are eating lunch together, over Zoom, and they're having that communication there. Volunteers are finding creative ways to volunteer, kind of like the food drop-off. And yeah, it's been interesting. Or yeah, actually, I can't think of what I was going to say next.
That's all right. That's all right. So how can people get involved?
Yeah. So people can get involved in several different ways. They can apply to be a mentor if that is something that they would like to do. If they're like, wow, I have this skill set, and I would love to teach students about this, whether that's like health. There's so many different things. They can reach out to me and get involved in that way.
How does the application, where can they find that information?
Yeah, so online at eastsideacademy.org, we have our mentorship application. There's also a volunteer application there. And then if there's something really like unique, they can always just email me. If they're like, hey, I have this like amazing idea to get, and I would love to be involved in this way, then that could also be a route they take.
Awesome. So is there a website you guys have?
Yeah, it's eastsideacademy.org.
Eastsideacademy.org.
Mm-hmm.
And Anny, I almost called, hey, gosh.
It's okay.
How else can people get involved besides becoming a mentor? They can donate. Yeah.
Yeah. We are always looking for donations. And I know that a lot of times people are like, we have a housing program, for example. So sometimes people are more passionate about having their money go towards the housing program. And so we are able to kind of say like, hey, if this is what you're passionate about, this is where your dollars are going to go to. So that would always be helpful.
Awesome. Amy, I really appreciate you taking time out of your day to share with us about Eastside Academy. I had no idea we had something like that here, and it's great to promote that.
Yeah.
So we really appreciate you coming on.
Thank you so much for having me.
Awesome. All right. So as we close out our podcast for the day, I want to thank you all for visiting. Thank our guests, Michael Burdick and Amy. Amy, how do you pronounce your last name?
It's Anny Ilisoi.
Dang it. See, I said Anny.
I know. Everybody says it. It's okay.
Right? You're like, I'm so tired of this. So Anny, last name?
Ilisoi.
Ilisoi. Anny Ilisoi. I'm going to work on that. Thanks to our guests. And as you know, the Eastside Real Estate team is currently partnered with a nonprofit called Best Christmas Ever. And we are also trying to raise money to provide a best Christmas for a family here in Bellevue. We've got the family identified. It's awesome. You can donate either a gift. We've got an Amazon wish list set up. Anybody can do this. So, go to the eastsiderealestateteam.com. Go to our About section and giving, and then there's a quick way to get there, actually. You can go to eastside.team/donate, and on there is a link to the Amazon wish list. So if you prefer to give a gift that's going to go directly to the kids or the mom, you can do that there. Thanks for watching our show. We appreciate it. Have a great week.